Hi, my name is Steve Loader. I'm a journalist and business writer, and I welcome you to this webinar, where you will meet and hear from two senior members of Rialto Markets, CEO and co-founder Shari Noonan, and CTO and head of market structure Lee Saba. They head a team of financial experts with considerable experience of working on Wall Street, the very people to ask about the fast-changing financial markets of today. We will, of course, also be taking questions from the floor, so feel free to pitch in via the chat. As highlighted in the invitation to this event, we want to focus on what makes a winning crowdfunding strategy. It's even more topical right now because just last week, and long after we scheduled this webinar, members of the US Senate Banking Committee came up with a wish list known as Jobs Act 4.0. This draft legislation, if adopted, could further fuel the entrepreneurial and investment revolution started when the original act was proposed. And I'm sure we all look forward to hearing what Shari and Lee have to say on that. Okay, before we press on, let me just say that if you arrived a little late or missed the ending, this webinar will be available in full on the Rialto Markets YouTube channel in the next few days, and you will be sent a webinar replay via email. Okay, so I now welcome Shari Noonan and Lee Saba from Rialto Markets. Hi.
Good afternoon.
Hi, Steve.
Hi. Shari, your resume includes major roles at Goldman Sachs, Deutsche Bank, and Instinet.
Yes.
While Lee's senior roles include Wellington management, plus leading and contributing to many industry standards on a variety of concepts. You're also co-chair for the FIX trading community. So obviously there's a lot more career background on both of you and your colleagues on the company website, rialtomarkets.com. But just to set the scene a bit, Shari, can I ask you about the journey that brought you and your team to this point?
Absolutely. Thank you so much, Steve. So the founders of Rialto really came out of the equities electronic trading space. The entire team really is steeped in traditional capital markets. And when we first started Rialto Markets, there was really a convergence of three really interesting themes. The growth in private markets, the rise in digital securities, and which are blockchain-based securities, and really the public's interest in private markets. And Rialto has leveraged those three trends to bring really private markets to the public. And I see that behind Lee today. So thank you, Lee, for bringing that out. We do this in a few ways. First, Rialto Markets is a FINRA member broker-dealer that focuses on empowering issuers who are private companies raising capital from the public. And second, we operate an alternative trading system across private markets in both traditional as well as digital form, the blockchain-based securities, as I mentioned earlier. And through the use of technology and by offering a secondary trading ATS, investors in private issuers can really monetize their investment faster and easier than ever before. So really our journey has been, coming from an industry where we had built a lot of this infrastructure to an industry where there's not a lot of infrastructure, laying the groundwork and moving into a brand new industry that's been quite exciting.
That's great. Thank you for that. I guess that what the audience will be wanting is for us to go head on into the title question. So what makes a winning crowdfunding strategy? You've very kindly given me 4 headings. Do you want me to pitch them one at a time and you guys mix and match? Perhaps I'll go through those headings first. Understanding the timeline, number 1. Number 2, working with a knowledgeable team. Number 3, it's all about community, having a community or coming in with a community. And then number 4, attracting diverse investor groups. So how do you want to play that, guys?
Absolutely. I can take these. So, I think first understanding the timeline, many issuers that come to us, we often need to set expectations and really level set upfront. Many of the success strategies really are simply just understanding the process, because a lot of people don't understand all of the complexities of the process, even with a regulation CF or a crowdfunding strategy. So we really make sure we sit down with an issuer and walk them through the process, walk them through the timeline. Now, to be clear, a Regulation CF, a crowdfunding campaign, really doesn't take all that much time. It doesn't have to take all that much time, but often many people will come to us and they've been sort of spinning their wheels for months because they haven't really sat down and at the beginning of the campaign mapped out everything that they need to do, whether that be getting an audit, whether that be engaging a legal firm that really understands how to do this and is steeped in filing the Form Cs on a regular basis. So we really encourage people to sit down and understand the timeline and also plan to have the funds available so that they aren't hitting any funding deficits and they've got that cushion. The other thing I'll mention is, to sit down to understand the timeline in terms of a base case crowdfunding campaign, and then also to add on any complexities. One thing we'll often do when we're working with issuers is we'll do an intake and we'll say, at the very beginning, are you planning on using crypto? Is there anything that's different about your campaign that would add any complexity or add any timing to launch? So I think that's important to set up front so that you can kind of plan how long it's going to take to actually go live. So I think, understanding the timeline is really important and making sure that you understand all of the prerequisites going in.
Okay. So working with a knowledgeable team, well, you'd obviously advance your own cause there, but...
Yeah, of course, and I know that's kind of a platitude or obvious, but I do think it's important because we've seen too many cases where issuers have come to us, and it's really quite unfortunate, where they've either spent a lot of time or a lot of money, or worse, a lot of time and money, and they've just sort of spun their wheels a lot because they've either worked with a team that they haven't brought in the right experts, or they've missed a critical component. So, securities lawyer, you need to have a securities lawyer that comes in on this. You definitely need to have certain components. And I think then once you've sort of gone through and selected that, it's also important to ask questions and make sure that you've got the right fit. I highly recommend interviewing a few different potentials in the category and making sure that you ask questions. I don't have a list of questions that I can sort of give you on this webinar, but I will say a good rule of thumb is to, ask for any metrics to back up any statements that are made. We often hear issuers that say, well, so-and-so told me they could do X by Y. And so we often, find that promises are made that then can't be kept. And that can be unfortunate. And, unfortunately, then the issuer is sort of left holding the bag at the end of that. The other thing I'll say is it's important to also understand two other areas that I think are important to call out in that sort of realm of the team that you're working with. Understand your fees. I know a lot of times when issuers come in, it's sort of, give me the contract. I just want to sign it. I just want to get going. Read the contract and understand what you're signing up for. Understand any breakup fees and sort of what you're signing up for and what you might need, because it's important to understand, if you need to pivot. A lot of young companies are doing crowdfunding raises. We work with a lot of older, more mature companies, but if you need to pivot, you don't want to back yourself into a corner of having to pay an exorbitant amount. And then last, understand what's happening with your data. Do you have access to your data? Do you have access to the investors that are coming into the site? Can you get access to that easily? I think that's one of the critical things, especially with the use of digital marketing and how digital marketing plays a pivotal role in crowdfunding raises.
Yeah, that's great. I particularly like that point you made about data. That's a very precious commodity, isn't it? And keeping control of that is vital. Point number 3 is one that fascinates me as well, the community side of things, having community or coming in with a community. People like to invest not just their money, but their ethos, really, their thoughts, don't they? And
I think this is one of the beautiful things about, the entire rise of sort of the crowdfund and this entire movement is people in general are investing in companies that they believe in sectors that they believe in. And so we work with a lot of companies that either come to us and they either have a community because they're a product they're a consumer product and they've already built up a loyal following, or they're in a sector, space is a big one, that has a very loyal following, or green tech, where people like to vote sort of with their, vote with their feet and invest in that space and really invest in the future. So coming in with a type of community, I think is really, really important, because, you really can begin your campaign by having the people that already believe in you build awareness around your company and give you that push to begin to build awareness and continue to build awareness of the company and begin to reach other audiences.
Excellent. And finally, you've said that attracting diverse investor groups is also a major priority. Want to cover that off?
Absolutely. I think, coming in with the community is important, but it's really important. And I think this is where the digital marketing feeds in critically, is to identify a variety of communities throughout the life of the campaign. So you really need a digital marketing firm that understands how to do this and to work hand in hand with them. So identify people that, really support the issuer's mission and believe in the issuer's mission and what you're doing, and how to find those communities and source those communities. And sometimes you'll source them through, finding the actual end point investor. Sometimes you'll find those communities through going to, whether it's an investor forum or another portal or somewhere else, but being able to find and access those communities and have a real strategy, a real marketing strategy, is critically important. But and if you can do that, and where we've seen this really successfully employed, is you sort of come in with one community, a shape of one community, and you build upon that community throughout the life of the Reg CF, and you end the crowdfund with a much larger, much more holistic, or much more diverse community at the end of the campaign, which then sets the company up quite well for the future to then have, an even stronger following.
Thanks very much for that. I see that some of our audiences have questions already, so we'll start adding those in shortly. But I just want to carry on with you guys. But I would really encourage everyone in the audience to get involved and ask their own questions via the chat, and we'll all get so much more out of this. If you were the CEO of a fledgling company, at what point in your capital raising journey would you look to Reg CF, Reg A+, or Reg D? Who's going to take that?
So capital raising has really changed quite a bit, even over the last 5 years. So, we often talk about the different capital raising options in terms of time to market and breadth of investor base. So the world's really changing from traditional seed to Series D raise to more of a conversation of what type of capital raise is needed, and the amount and who are you looking to raise it from. So this really changed once Reg CF raised that cap to 5 million every 12 months about a year ago. It was March 31st, a year ago. Once Reg CF raised their cap 12 months ago, a lot of more mature companies started accessing Regulation CF for, $5 million, $3 million as a bridge between their Regulation A raises. And, we see a lot of founders come to us and say, we're looking to access Regulation A, Regulation CF, rather than traditional Regulation D or a traditional venture round, we'll go to the institutional market. We understand we have to go to the institutional market, but we're going to wait until we meet more milestones in terms of our company's evolution. And we're going to use this market for the beginning stages of the company because of one, we can get the community involved, and two, when we have gotten the institutional market involved so early in the company stage, we've given up quite a bit of the company at the very early stages, and we also have an army of advocates at the end by going the crowdfunding route. So we're really seeing a shift in terms of how founders are accessing these markets.
Great. Okay. I'm going to try and give you a break, Shari, because I suspect this next question is one that Lee would love to take on. As we know, crowdfunding took off with the Jobs Act, or Jumpstart Our Business Startups Act. We seem to have forgotten that's what it stands for these days. That came into effect in 2016. But following last week's Jobs Act 4.0 Senate briefing, it looks like the crowdfunding scene is set to become even more exciting. And I suspect you'll like this one, Lee, because I read some powerful and upbeat comments you made on behalf of the company when the news broke a few days ago. So can you talk us through some of your thoughts and see where this might go if adopted?
Sure. Yeah. Thank you, Steve. And thanks for, reading our stuff. That's great. No, this is great question. It's exciting times. We'll try to go into this proposal, I guess, at least at a high level about what it's encouraging right now. And some of the benefits that we see, right out of the gate. And it's packed full of data. I mean, there's 43 pages to this proposal. And again, I would argue it's a proposal right now, but I think they're thinking about it correctly, which is really nice to see. And I think it's going to get, a lot of bipartisan support. So first of all, the Jobs Act 4.0 proposal really seeks to, improve the market for private capital. They include a bunch of initiatives to reduce the costs associated with seeking capital by, properly tailoring the regulations for small businesses. That's one of their number one goals. They also want to enhance the retail access to by investors to these new, unique investment opportunities. And I think there's about 8 initiatives in the proposal that are going to try to allow more access to certain investment opportunities for retail. And again, I think it goes to some of the things Shari was saying about, understanding your community and the folks that want to participate. I mean, these are folks that can really, help drive your capital raise and want to be part of your organization from a securities perspective. The other angle here that they're trying to improve is just regulatory oversight. There's, I think, about 7 initiatives within this that want to provide investor protection and privacy for, and overhaul some of the outdated statutory provisions that exist today. The other one, which I think is really exciting, is this expanding opportunities for underrepresented entrepreneurs and investors. When you think about it, and according to the statistics within the proposal, there's 31.7 million private companies in the United States. That's a lot of private companies. And when you start hearing some of the data coming out, and this is data that we've been following as well. But here's a good one. From July 1st, 2020 to June 30th, 2021, private offerings raised a total of $3.3 trillion compared to the $317 billion raised in IPOs during the same period. That's a significant increase, in difference between, private and public. And I guess, lastly, they want to modernize the accredited investor definition, which is, basically, rethinking who can invest in these asset classes and, are you qualified? It's not just a very sharp litmus test. I think they want to expand it out. If you work in financial services, if you have an understanding, if you have, you don't have to have, millions of dollars in the bank to be able to participate in this. So, again, I think it's a great start to very interesting times and to already enhancing, the already successful Jobs Act. And it's just, I think it's going to give it a lot of momentum.
Brilliant. Clearly, there could be some more changes to come if Jobs 4 goes ahead. But as the land lies now, are there any restrictions on the kind of companies that Rialto Markets can help raise money or trade shares with?
So I can take that. And first, I want to be clear because I saw some questions. I was looking at some questions in the chat. So the way that we work with issuers is we are a FINRA member broker dealer. And basically the way that we work with issuers is we are a self-hosted solution in the primary markets. So when an issuer comes to us and would like to work with us to assist them in a capital raise, whether that's via Regulation CF, Regulation A+, or Regulation D, we work with them on a self-hosted site basis. That means we're different versus sort of a portal solution. So you can either make, your first decision point is, do you want to go with a portal or do you want to do a self-hosted solution? When you're doing a self-hosted solution, it looks like it's your website, but there's a button at the top of your website that says Invest Now, and they click Invest Now, and then we are behind the scenes with some of our partners with the questionnaire that is filled out. And then the information on the investors come to us. We perform the AML KYC and the reconciliation around the funds. So I just want to be clear, we're not actually, funneling investors to the issuer. One of the differences in Rialto is we're not out there, sending investors to the issuers. The issuers are then using digital marketing dollars and going out and targeting investors and getting investors in that way. That's why there's a difference in between what portals charge and what Rialto charges, what a self-hosted solution charges. A self-hosted solution is less expensive than a portal. So that's one big difference in terms of the differences. So I just wanted to make sure I clarified that. In terms of what companies we restrict, you need to be, for a Regulation CF company, you need to be US based. For Regulation A, US based, Canadian. And as long as you're offering securities under Regulation CF, Regulation A+, or Regulation D, we can assist you.
Okay, excellent. I'm noticing some of the questions coming up in the chat now. There's a really interesting one here from Mark Kaprinsky. Apologies, Mark, if I've mispronounced that. But how are retail investors learning about crowdfunding investment opportunities, and what is the profile of this type of investor? Older, younger, day trader types, high net worth? Any thoughts on that?
Yeah, so they're actually, it depends. It depends on the offering. Usually, it really does depend on what offering that we have out there. And the retail investors are learning about it from either the digital marketing campaigns that are running or from the company themselves. So that's really how they're learning about the campaigns. Day trader types, they're really not the private markets. These aren't liquid markets. These aren't markets that you go in and out of. And they are not the type of markets that are sort of liquid. So these are private market securities. High net worth, these markets, because they're Regulation CF and Regulation A+, you do not need to be an accredited investor. We do see a fair amount of accredited investors investing in these securities, but you do not need to be. So I hopefully answered all of those questions.
Great. Go
ahead.
Yeah, sorry, one's just come in here that relates back to the Jobs Act 4. So I'm wondering if Lee can pick up on this one. It's a question from Tim Thorpe. I beg your pardon. He's basically, we've pretty much answered that, I have to say. Yeah, hang on.
Yeah, I saw that a little bit earlier. Yeah.
Yeah, sorry. I didn't. Let's go back to the main question list here. When will the secondary market for private companies become the norm, do you think? Maybe Floor will accelerate that if it comes into play.
So absolutely. So we really feel strongly that the secondary market is the long game. And we know that if you look at secondary markets in secondary trading platforms in private markets, there's been a lot of discussion about this, and we feel very strongly about it. We do think it's going to take some time to gain some traction. We've started in the primary space about 1.5 years ago. We've got our first issuers coming off of sort of that flywheel coming onto the secondary market now. In addition, we're working with some marketplaces at putting those marketplaces, sort of if you think about the fractionalization of everything, cars, art, wine, we're working with those marketplaces at putting those marketplaces on the secondary market and offering secondary market liquidity or trading on our ATS. So we really feel like that is a pathway for those venues.
Okay. Here's a really interesting one, which opens up a new area. It's a question from Thomas Nicole. The SEC seems to be looking closely at NFTs and cryptocurrencies, and specifically stable coins. How does Rialto Markets fit into the changing regulatory landscape?
Yeah, I'll give that to Lee, our head of marketing.
Yeah, sure.
Funny you should say that.
Yeah, I mean, look, I guess we got to think about it. We play with or participate with folks that are already focused on sort of positioning themselves with existing securities laws, right? And NFTs, stable coins, as much as they may look like securities, and I do feel that many of them are. I agree with Commissioner Gensler in the commission in general that these do look a lot like securities, and they would need a regulated framework. So whether it's a stable coin, an NFT, or fractionalized something, to what Shari was talking about, the Reg CF, Reg A constructs are quite tailored for that. But you have to register with, and get those exemptions and follow the process. And if it's no secret when you listen to Commissioner Gensler and his quotes and his online presence, he mentions it. I want to say every time I've listened to him since his appointment last April. So he's not, this is no secret. So I think once they are under, some sort of regulatory oversight, that's when we're allowed to participate with them, and we're happy to talk through some of the options to get into that qualification, whether it's CF or A. So yeah, I mean, it doesn't really matter as long as it's following existing securities laws is where we're gonna hang our hat.
Okay. Yeah, it's quite an interesting area. It's very much watch this space, isn't it? There's a question in here about, we've talked about crowdfunding, and this question, when I find it, specifically talks about one that asks about one that you've handled and how it worked. I just credit the person who asked about it. Bear with me a second. No, I can't find the exact question. Sorry. But basically, yeah, I think the idea is, can you just talk about, without mentioning names, if that's an issue, but a crowdfunding raise that you've handled recently that shows the potential and how it was managed.
Sure, I can talk about when it was from Joe Reynoso, and we handled Atlas Motor Vehicles crowdfund. Atlas raised $5 million in 6 weeks from about 6,000 investors. they opened up a Regulation A plus about 4 months later, and that's almost complete. I believe there's about $8 million, $7 million completed in that. All of this is public knowledge, so I'm not giving away anything that's non-public information. So you can go to their website and see that.
Great.
And there's another question I just want to address from Gary. Can I crowdfund for non-accredited investors? Yes. So Regulation CF and Regulation A plus, non-accredited investors. That's one of the components of the framework. And there are limits as to how much non-accredited investors can invest in private companies, but that's what the Jobs Act provided for.
Okay, yeah. Thanks for covering that one off. We haven't touched upon your secondary trading platform too much. There's a question here from Peter Coleman. I'm keen to understand how your secondary trading platform works and how it will create liquidity over time. Is that one you want to?
I'll start, Lee, if you want to pipe
Sure.
in. I first like to address the liquidity component. So private markets are not liquid. So if you think about, IBM with a market cap of what IBM has versus a private company with, a market cap of, call it even, $500 million. The liquidity profiles of those two companies are going to be quite different. And also the trading within those two companies are going to be quite different as well. So I just want to be really clear that, having been in this space for 20 some years, that the alternative trading system that we've specifically developed around private markets is not so much creating the same type of experience that we created in the equities national market system, the NMS world, where you've got, IBM and GM and Ford and all these super liquid securities trading and building books. It's a very different experience. Having said that, the way that our alternative trading system works is we've got a few goals. The first is to allow the holders of private securities to the ability to monetize their shares before before some sort of M&A event, or before they would otherwise be able to. So that's sort of the obvious first goal. With a Regulation A investor, those securities are freely tradable. So as soon as you purchase that security, it's freely tradable, which is quite an interesting quality of those securities. So the way the alternative trading system works is the securities come onto the platform. We have information about the security, whether that's SEC filings, information about where the security has been traded, information on management, any kind of news articles. And then there is the ability we've got two trading modalities. The first is an order book. Anyone who's a subscriber on the alternative trading system can input an order. That order, if they're looking to sell the security, they would need to put the order in, and we'll check to make sure that they own the security. It's freely tradable. There's no holding period or seasoning associated with it, and that there's no encumbrance associated with that security. On the other side, anyone looking to purchase the security will make sure that they have the money. And then, that book is a lit order book. Those orders are really intended to be more for the smaller orders, retail size orders. We also have an auction methodology that is more for larger institutional size or larger blocks. And an issuer can choose to employ the auction methodology, call the auction when they would like. So whether that be on an annual basis or on an as needed basis. So Lee, is there anything you'd like to add to how I explain that?
No, I think you did great, Shari. It was great. The other piece too is, before you get into the ATS, there's a couple of things that we check. One of them is making sure that the shareholder actually, has the shares and they're free and unencumbered. So we do a quick ping to make sure that that's available. We also do the same with the payment rails to make sure that there is cash behind the purchaser's ability. Once the orders meet in the ATS, they should be, very eligible to cross should they meet the limit requirements. Once they do, we have almost 100% certainty, and I know you just use almost because you never know, but we've done all that we can do up front to make sure that trade will process accordingly. So, we match the trade, the buyer gets their shares, the seller gets their money, and then we update all the relevant parties accordingly. I think on the liquidity side, one term that we use a lot is something called like fluidity. Private markets have been very difficult to find the other side. Or whether maybe you missed the primary offering and you want to buy some of this. Maybe you want to realize or monetize some of your position already. You can also do that in the ATS, but it is not trading like Amazon or IBM. But there is an opportunity, and we've smoothed out the lines for you to be able to do that. And that's what I think is exciting. And the more folks that participate, in this, the more likelihood you're going to have to match.
Yep. And I apologize. I keep sort of taking over the chat questions, but I see a question from Tony in here around the token. And do you mind if I just...
Yeah, go ahead. I was looking at that one, the one from Tony Pettypiece.
Yeah, do you want to read that? And I would love you to take a stab at that.
Many want to rush to issue a token as it's perceived as sexy, but that can be a distraction or confusion for investors can that be a distraction or confusion for investors in the fundraising step? So fund first, then token, or NFT with rights as a second phase?
So I think, hi, Tony, and I actually know Tony from, so thanks for participating. It's a great question. And, tokenization is nirvana, right? Once we get clarity on the fact that, if these tokens are available and are actual securities, not also represented on a cap table somewhere or at a transfer agent, then that opens up a lot of, processing and post-trade and operational efficiencies. To date, it's really not there. And again, we need some more regulatory clarity. It would be great if Jobs Act 4.1 would maybe address some of this as well. But right now, I agree with your quote. I think it's perceived as maybe sexy right now, but it is. And again, I don't want to dismiss it because it's very important to the evolution of markets in general, whether they're private or public, because this, a tokenized product that is, recognized by the regulatory bodies is will help with everybody from TAs to custodians to, almost atomic settlement. This is going to revolutionize things in ways that I think are even difficult to perceive now, because we've built institutional processes around the red tape, I guess, right? And folks have capitalized on areas of that red tape. Now we're trying to unwind some of that red tape, and there are entities out there that actually make money on that, believe it or not, right? Around the inefficiencies, and they're going to protest a little bit as this market evolution is going that way. So we are definitely all in on the tokenization. But we also, again, need to play within the current regulatory structures.
Following on from that, I've just had a question in from Paul Stannard. Shouldn't these tokens be linked to a real asset that is regulated on an OTC or ATS?
Well, I think that's what Lee was referring to when he was saying the regulatory clarity.
Beg your pardon.
Absolutely, yeah. I think that's been the challenge, is the regulatory framework around that.
Right. Okay. Interesting question here that follows in a little bit from the earlier, well, the title of the actual webinar, and talking about the elements that you need for a successful crowdfunding. And this one's particularly talking about the marketing side. It's a question from Amanda Thurston. My company supports tech companies, but often founders think that crowdfunding will finance itself. And in our experience, you have to have friendly investors to come in at the start and at points in the crowdfunding raise, but it's having a sustainable marketing budget before going into this, and always remembering that investors are often customers and advocates. There's a lot in there, but I think you know where it's going.
That's absolutely right, Amanda. And I think, that speaks to the community point. And, often when we talk about a crowdfunding and we sit down and talk about the timeline with issuers, we'll talk about not just the timeline, but the budget. And the budget is, pretty straightforward in terms of, this is how much you're going to spend on legal. And I mean, we're not obviously covering the legal, but we can direct, issuers to different places to go for legal and for other areas. The one big X factor is marketing. And, but that's also going to be the one area that issuers cannot avoid and cannot, dismiss and say that they're not going to invest in marketing. And in fact, we've unfortunately had situations where issuers have said, well, I'm not going to, do the marketing. I'm just going to see how it goes. And unfortunately, unless you're going to invest in the marketing side of things, you're not going to be able to reach your audience. And so you really do need to have that marketing element and that community to drive the traffic.
Okay. I'm just going to move away from the questions coming in from the floor just for the moment. And if by chance we don't get back to you in the webinar, we will reach out to you afterwards to try and help out with some of the queries that you've got. But I just want to establish a little bit more about Rialto Markets itself. I think people would like to know your standpoint and where you're coming from. And one quick question that comes to mind is, what is the commercial traction and pipeline looking like for the year ahead? Is that something you can tell us about?
Sure. I can start this. Absolutely. So, we've really seen tremendous growth since the caps were really raised in March. I think that was a big inflection point for the overall industry. It sort of was as if a lot of issuers took note once that happened. The pipeline's really expanded, as well as the types of companies that we're working with. I think a lot of more mature companies, that were, traditional Series B stage companies that started coming in and exploring this type of raise. That was really interesting and not expected. I just, to be clear, the majority of the firms we work with continue to be in emerging industries and at the earliest stages of growth. But I thought it was interesting that some companies that are, established and maybe, have been around for a while in more traditional areas, started looking at this as a way to either build more of a community or to take, to engage their community. So that's really, our pipeline's grown quite significantly. We're up 54%, and the majority of our contracts, or the majority of our business, is in the Reg A plus sector. From a notional perspective, over 90%, but that's because they're significantly larger than Reg CF, and about 5% in Reg CF, and the remaining in Regulation D. The industries that we're in are in med tech, electric vehicles, beverages, clean energy, gaming, and blockchain. So those are the different industries that we work with. And in terms of where sort of we're going, we're expanding our lines of business, and we really plan to have a new line of business up and running in the second half of 2022.
Okay. Did you mention that you'd exceeded the $1 billion mark in pipeline contracts?
Yes, we have. Yes, we
Yeah.
have. It's really exciting.
Yeah. And I understand you're also actively raising nearly 240 million for 21 companies. Is that, tell us any more about that? Or?
That's correct. I think, what's been really interesting is just the breadth of the different companies that we're working with. And I think, when we first started working with companies, it was, green energy, consumer vehicles, and now it's sort of expanding into, companies coming to us more around, like I said, either medtech, companies looking to build a community and use that community as part of their overall strategy from the very beginning of their corporate life cycle, which I think is a very different mindset when you think about how you're starting a company. So that's quite interesting.
Okay. Right. There's a question here from Paul Stannard. We have a healthcare tech platform, a Reg A followed by a Reg D round. Is this something you would advise on?
I'm so sorry, Steve. I was distracted by the chat. Can you ask that one more time again?
That's right. Question here. Paul Stannard says we have a healthcare tech platform, a Reg A followed by a Reg D round. Is this something you would advise on?
Absolutely. We work with a lot of medtech. We've got about 12, I believe, either that we're speaking to or that we're engaged with and working with actively launching medtech companies. So it's quite interesting in terms of how medtech companies recently have begun working in this space. And I never would have really thought about this, but what's quite interesting about medtech companies is the fact that you've got this really long sort of life cycle, in terms of their corporate life cycle. And they also have a lot of trials, clinical trials, but they're also usually, identifying and solving for particular issues, diseases, and so that will resonate with particular people out there that again rally around a community. And so that's where I find it's interesting. We're finding success with, or these companies are finding success at engaging that community to either help solve these issues, or even be part of building the solution for either the chronic illness that they have or that a loved one has.
Yeah, I agree. It goes back to that community aspect of some of this, sort of crowdfunding style stuff. And I think those medtech companies understand regulation. The ones that I've spoken to are certainly.
I was going to say, do you want to expand on that, Lee? Because
well, they're highly regulated as well, right? And when you speak with them, we're talking about securities laws and everything else. Like it's not a stretch for them. They're not like, what are you talking about? Like, because they're dealing with pharmaceuticals and drugs and just patient things that they need to get approved, and it takes years and years and years for some of their products to get across the line. And the folks that I've spoken to at medtech entities are, they're just already they're already understanding of the regulatory process, and I would say that our process is probably much faster in the financial services world than the medical world.
All right. There's a pretty fundamental one here from Gino Herring. Do you see crowdfunding growth as a truly viable alternative to traditional investing? I guess I know the answer to this, but it'd be nice to just sort of lay it out.
You mean from an investor standpoint?
Yeah.
So I definitely think, what we're seeing is we're really seeing investors, and I find this quite fascinating, especially coming from traditional capital markets. I sat on a trading desk and for many years, and so I find it quite interesting that we're seeing, the general public say, I want to take control of a portion of my investable assets, and rather than just whereas 10 years ago, how many ever years ago, time kind of flies for me now, but it was, you put your portfolio into an ETF, or you invest it in this way. Now people are saying, okay, that's fine for a portion, but I want to take this slice, and this slice I want to invest in this way. And this way might be 10% this, 10% that, but people are taking more control of a slice. And again, what I love about the Jobs Act and what I love about what is happening with crowdfunding in general is there are guardrails on it. You can't invest your entire nest egg in, a private company that just started up 2 years ago. There are guardrails around, if your net worth is X and your income is Y, you can only invest XYZ a year. So it allows the general public, unaccredited investors, to invest within their limits in these companies that have the potential to be, high growth companies. And that's where, as a lot of people have said, and what we've seen is companies are staying private longer. By the time they hit the stock market, by the time they enter those ETF indices, they've kind of lost a lot of that growth, and they're not achieving the same amount of returns that they were in the past, that they were 5-10 years ago. And so it's really, I find it's really a great way for the SEC to allow the investing public to be able to participate in the same way that the more affluent private investors are.
Okay.
Great.
I'm going to just move back onto the agenda I've got, and there's a key question of mine to you, Shari, as the female leader of a fintech company. What would you say the principles and culture of Rialto Markets is, from your perspective as a co-founder?
Yeah, so I think we're very we're a small team, but we're definitely we always have a very open culture of asking questions and definitely breaking down and building back up. So we've built a lot of things, but within a regulatory environment. So it's not move fast and break things. It's build something and then make it better, and do it within this box, but always build something that is scalable. And so I think the great thing about our team is we've really brought in an unbelievably talented team. And I say that with all sincerity. We've got an extraordinary team at Rialto that I'm quite honored to work with. And everyone on the team has a great amount of experience. And so when we get together, we're really able to bring our unique points of view to the table and really attack different issues, different problems with our own unique experiences and be able to solve them. And so that's where I think we've been really able to scale to this amount, and we've been really fortunate from that standpoint.
Okay, and this is a question which I had up my sleeve because I thought it might come up in the chat. But can you talk about the process that you went through to get approval for an ATS and what that approval encompassed? Because some sources seem to suggest it's a simple form-filling operation. I think you might beg to differ on that one.
So our team, we've actually begun and operated 9 ATSs. So we've got quite a bit of experience in terms of actually going through the process and then running ATSs. But I'll caveat it in 2 ways. To actually start an alternative trading system, to get the initial approval, the mandate, it's you first need to become approved to become a broker dealer, to receive that mandate. And so that's one process. And there's a number of things that go into that process, and that includes, making sure that you're qualified, that you're have industry experience to actually do whatever it is that you plan on doing. And I believe a lot of people that aren't in the industry feel like you just become a broker dealer. You don't become a broker dealer for anything sort of in general, but more so in particular. So for example, if I said, I wanted to become a broker dealer in, energy futures, I'm sure FINRA, well, it wouldn't be FINRA, but if it was something outside of the realm of anything that I've done, I'm sure that the regulators would say, no, you're not qualified to do that, even though I've been in the financial services industry for over 20 years. So I think that's really important. So it's sort of the qualification first. Second, it's really important to understand there's a lot of infrastructure, both regulatory infrastructure as well as controls infrastructure, and then and that's all for good reason. That's years and years and years of sort of every time something's gone wrong, the regulators have come in and said, okay, that went wrong. Let's put something in place to make sure that doesn't go wrong again. And so I think the regulators have learned time and time again and have put more controls in place. So, that's just to become a broker dealer. Now let's move it to become an alternative trading system. Then you add on the alternative trading system on top of that. Again, there's technology and qualifications in terms of, have you done this before? Do you have the technology to do it? And do you have all the controls and the product expertise and the ability? And are you hooked into all of the reporting mechanisms that are required to actually facilitate everything that you need to facilitate? So it's quite an extensive operation. It's not something you sort of wake up on a Tuesday and say, I think I want to do this, and you pick up the phone and do it. I do think there are other markets that are more mature that it's probably slightly easier, but certainly for private markets, it's new territory, and it's definitely not an easy endeavor. And then you sort of layer on the digital securities on top of that, and you've got yourself a fun project.
Still on ATS. Sorry.
I hope I answered your question.
Yeah, still on ATS. Do you have to be a client of? This is a question from Jim. Do you have to be a client of Rialto through a Reg CF, Reg D, or Reg A to list your security on the ATS?
Absolutely not. No, we do work with issuers that did not work with us on the primary. We don't have an issue at all with that. So feel free to reach out.
Okay. Now, I'm wondering, well, I think we probably should move towards closing. Shari, it would be great if you could now summarize what you hope people will take away from the webinar. Sorry to load that on you again, but can you just sign off for us really on what you hope there'll be the best takeaways from it?
Absolutely. So, first, I think it's a really exciting time in private markets. We really believe we're at a significant inflection point for the industry. For issuers, really the ability to raise capital in new ways and develop a community that's really invested in the success of your company is incredibly exciting and opens up new pathways. We really believe it's the way forward for a large number of new companies in the future. But I really think, in addition, the ability to digitize private securities revolutionizes both the operational footprint, which Lee brought up, of private markets, but it also opens up, and I know we didn't speak about this very much, but it opens up product development in ways that was really previously unavailable. Mm-hmm. And so I just want to kind of drop this in at the end, but something we don't talk about much, but much like when music was digitized, and then you could kind of slice and dice songs in ways that was unavailable via vinyl. You could, from a vinyl record, you could just sort of have the record and play all the songs back to back. Once you put it on an MP3, you could sort of do lots of interesting things with those songs. In the same way, once you take private securities and digitize them, you can build a lot of really interesting product. And I think that's what a lot of people inherently see and what they get excited about in this space and in the future of private security. So that's really, what I see the future as and where I see this industry going. For issuers, I definitely see it opening up new vistas in terms of capital raising, But as an industry overall, I see it just opening up the space of product development and entire new realms that is just going to grow the market even further.
Excellent. Well, thank you very much for that. And once again, for those who might have arrived a little bit later, this webinar will be available in full on our YouTube channel in a couple of days, and you will be sent a webinar replay via email too. And right on 2 o'clock, I think we shall wind things up. So thank you for attending, everybody, particularly our audience, for engaging so much in the event, and Shari and Lee for answering the questions that were thrown at them. Finally, you can get in touch with Rialto Markets via the rialtomarkets.com website if you have any questions or want to join the Rialto Markets investment community. And anyone who didn't get a question answered tonight, this afternoon, we'll reach out to you and attempt to answer those questions. Thanks again. Goodbye.
Thanks, Steve.
Thank you.
Bye.
Bye now. Thank you, Steve.
Bye.